Friday, May 31st, 2019, Maneco 64, home of alternative economics and contrarian views. So Billy is back today. He has been a little lazy. He's getting older. He's going to be 11 in July this year. Anyway, today I want to talk about trade and specifically something called Triffids Dilemma, especially with all the headlines coming out. And just overnight, this is what we've gotten. Donald Trump threatens tariffs against Mexico over illegal migration. U.S. President warns of levies on imports unless border crisis is resolved. So not surprisingly, the stock market is lower this morning. All the blame has been put on these trade wars, not only with China, but now with Mexico. And that's why before I look at the markets, I want to go through something called Triffids Dilemma. Triffin was a Belgian economist in the 60s. And he said that in a system where one currency dominates, one national currency dominates the system, the monetary system, like the Bretton Woods system, which wasn't really technically a gold standard. In a gold standard, yes, there are currencies that have more gold, that are dominant, but if you have gold, it doesn't matter. You can trade with the rest of the world. But under the Bretton Woods gold exchange system, you had to use dollars to trade around the world. Currencies were indirectly pegged to gold. It was only the dollar that was pegged to gold. So Triffin, I think his first name was Robert, I'm not sure. That's not that important. If you Google Triffids Dilemma, you find him. He said that because of that, countries around the world who wanted to develop their economy, to industrialize, they would have to compete with other countries and they would have to accumulate also dollar reserves. And how do you do that? Well, you try to sell as much as you can to the United States. You try to compete as much as you can against the United States. And that's what's been happening. That's why, especially after the U.S. went off gold temporarily in 1971, where the dollar is irredeemable. It's not redeemable by anything. It's allowed the United States to accumulate and issue a lot of debt. So more and more countries are trying to get more and more dollar reserves to trade with other countries around the world. And that's, in my opinion, the underlying problem with the current monetary and international trade system. What Donald Trump is doing, I don't think he's going after the real problem. The underlying problem is the world monetary system. This is not going to solve anything. Maybe there's an agenda that I don't know about, with China, with Mexico, with Europe, with other countries. Maybe this is just a distraction. The trade wars, it surely is a great scapegoat for the Federal Reserve, I think. The fact that if we do get a recession now, everyone's going to blame Donald Trump and the trade wars. And personally, maybe he just triggered it. But if the world monetary system, the credit market, the monetary policy we've had in the last decade, that's what's caused this, the boom and busts accentuated by the Federal Reserve. Their how can I say, extremist monetary policy. They, not only the Federal Reserve, but all the other central banks in the world, the ECB, Bank of England, Bank of Japan, the policy of giving free money to the top 1%, to the owners of financial assets, basically giving them money for nothing. And it continues. I mean, you look at the interest rates in the UK, for example, and that's why I encourage people in the UK, if they do have extra, savings, big amount of savings or a small amount of savings in the bank that they don't need to use, I would personally have, exchanged quite a bit of that for precious metals, because precious metals protects you against the debasement of the currency. How can you tell me that the UK, establishment, government, Bank of England, monetary authorities are not debasing the currency? I mean, we see 10-year gilt yields at 89 basis points below 1%. We have RPI, which is the old measure of inflation that used to be used, at 3%. I would say that's even conservative. Cost of living is rising by 4 or 5% in the UK. I think fund managers in the UK, pension fund managers who invest in the bond market, and especially in gilts, are failing in their fiduciary duty to protect their policyholders' interest. It's going to end in tears. You're losing 4 or 5% a year just leaving your money in the bank in terms of purchasing power. So that's what it's all about. Yeah, and the central bankers are lucky that Donald Trump is doing what he's doing. Maybe it's part of a plan. I don't know. But yeah, so let's go over this headline here from the FT, or over the story. I've gone over the headline. It says here, Donald Trump threw down the gauntlet on Mexico, threatening to set tariffs on all imports from America's southern neighbor unless it stepped up efforts to stop illegal immigration. The U.S. president said in a statement on Thursday that goods coming from Mexico would be subject to a 5% levy beginning on June 10th, and would be removed only if the migration crisis was alleviated through effective actions taken by Mexico, to be determined in our sole discretion and judgment. Mr. Trump added that the tariffs would be increased to 10% in July and 15% in August, 20% in September, and 25% in October if the steps were not taken. This is what he said on Twitter. We have confidence that Mexico can and will act swiftly to help the U.S. stop this long-term, dangerous, and deeply unfair problem. Of course it is a problem, but it's not Mexico's fault entirely. It's the fault of the monetary non-system that we have. And we don't have a system because ever since Richard or Tricky Dicky Nixon, suspended the redeemability of the Federal Reserve note into gold, there is no system. Ever since 1973, when the major currencies went free floating, there is no system, Mr. Trump. So there's two sides of the coin. I'm not trying to play politics, defend Trump or anything. I'm just talking about what's happening. So what about the Federal Reserve? Well, there's a headline here also from the FT, Federal Reserve Vice Chairman. I hate the way people say it, Vice Chair. He's a chairman. He's not a chair. Federal Reserve Vice Chairman open to rate cuts if outlook dims. In a change of tone, Richard Clarida says central bank must be nimble to sustain U.S. growth. A top Federal Reserve official has said the central bank could cut rates if the outlook takes an unexpected turn for the worse, as he vowed to be nimble in ensuring U.S. expansion continues. So let's have a look at Richard Clarida, or Clarida, I'm not sure how you pronounce this name. Let's look at his background. Clarida has served as a consultant to several prominent financial firms, including Global Foreign Exchange Group at Credit Suisse First Boston, Grossman Asset Management. From 2006 to 2018, he was Global Strategic Advisor with PIMCO. So this is a guy who wants to keep the game going for his mates on Wall Street. He's a Fed official, but look at his background, right? So, and I'm not surprised that he's saying that. You look at the yield curve this morning. I'll start with the bond market this morning. It's just before 8 a.m. And I can say, having worked as a futures and options broker and covering bond markets especially as the core of my business, I can tell you something is wrong in the Kingdom of Denmark or in the bond market. Treasuries overnight, the 10-year is down 5 basis points, and that's huge. We're now at 218 the yield, or 217, 2.177. The 1 month is at 237, so we're now inverted by 20 basis points. Yeah, there is a problem out there. So I will bet that the Federal Reserve will be probably cutting rates very soon, before the end of the year, if this continues. So what are the markets doing after this Mexico threat from President Trump? And it's interesting that he's using the trade card for something not to do with really economics or trade. He's using it to do with the border, the migration problem. And that's completely, with China is more to do with the trade. I guess you could argue it's the Chinese are arguing that America just wants to stop, Chinese companies from competing. That could be part of the problem as well. So let's look at what the markets are doing here, aside from the bond market, which we know is showing, I have to say, in my opinion, the chances of a severe slowdown or recession are very high. I'd like to say it's more than 2/3, more than 66%, if not very close to 100%. Spot gold is up $6 at $1294.70. The high's been $1295, so we're right near the highs. $1287.83 has been the low. So let's have quickly look at the chart here. This is a weekly chart. We've been looking at this falling wedge a couple of weeks ago. It broke out of it, came back. It looks now like we're breaking out again, and it's still a falling wedge. So this is looking pretty good right now. I don't want to say, oh, gold's going to the moon, but as always, especially living in the UK, I'm very comfortable with having gold. Gold is now over 1,020, I think, in pounds. Let's see where we are. XAUGBP as well, 1,026. I think the key level is really 1,035. So we're 1,026 pounds per ounce. Silver is up 1 cent. So silver is not keeping up with gold, which is not ideal, but it's at 1452. The Dow future is down 218 right now, 0.86%. Right near the lows, 24,946. The low is 24,940. S&P is down 25 at 2763. So it looks like the head and shoulder technical analysis is working now. I talked about it about 3 days ago when we closed below the neckline, and it's continued to go down. Does this mean I'm going to be right? No, but there's a good chance that we're going to keep going down, and I'm not even talking about the rising wedge that we've broken already. So that's the S&P. NASDAQ, of course, is down 70. 100, NASDAQ 100, it's at 71.73, down 1%. Currencies have been very quiet, early on recently, but the dollar is losing a lot of ground against the yen, which is a carry trade currency. Carry trade just means that people borrow in yen to invest in riskier assets. When riskier assets are under pressure, the yen rises, and that's why the dollar is down, because people are buying back the yen because they're losing money on their higher asset trades. So yeah, 108.90, below 190, the dollar yen, below 109, the dollar yen. It's down 2/3%. Against sterling and the euro, the dollar is virtually unchanged. Against the yuan as well, virtually unchanged, 692.80. Crude oil, yeah, a bit of a up and down the last few days. We're back down here below 57, which was a level we bounced from a couple of days ago towards 60, and we're now at 55.90, down 1%. WTI. Brent crude is at 64.35, down 1.24%. So there you go. I think it's going to be a very interesting day. Yes, Triffids Dilemma. I think that's the whole problem with the international trading system. Donald Trump is going more at the symptom, I think. Does that mean that's wrong? I'm not going to judge that. And I think the central bankers are very happy with him, because they're not going to have, it's going to be a great scapegoat when we go into a recession. It's going to be the Trump recession. He started a trade war, and that's what slowed everything down. No one's going to look at the policy of easy money that has to come to an end. Credit cycles. We do have credit cycles. Credit can't keep going up forever, and that's what it's about, in my opinion. If you enjoyed this video, make sure you hit the like button. If you haven't subscribed to the channel yet, think about subscribing. Make sure you share this video far and wide if you think others would enjoy this kind of content. You can also follow me on Twitter, Steemit, and on DTube. So Billy and I say goodbye and have a great day. Take care.